Hi guys, very good evening all of you. So guys, how are you? First of all, happy Women's Day to all the great ladies in everyone's life, like mom, you call it the sister or anyone, whoever it is. Okay, so they are our support system. So I wish all of you a happy Women's Day. Are we ready to start the class? So today, let us start with leverage analysis. Okay, so now tell me, out of all those attending the class now live, how many of you have done leverage analysis problems before? How many of you know leverage analysis concept? We'll solve all the problems. I'll explain you the concept, we'll solve the problems, but just I want to know if you already know leverage analysis, just type in the chat box, I do, meaning that you have already done leverage analysis and you know the concept little. Very good. Okay, very good. I'm happy everybody is saying they have done this. Vrinda, you have not done leverage analysis before. Come on, dude. Seriously?
Sir, I have learned in BCom but not in CA.
You have learned in BCom.
Yes, sir.
BCom is so knowledgeable, no? So don't worry about it. We will learn everything. FM May 2020. Okay. So guys, basically leverage is nothing but a ratio. What is that? Leverage is nothing but a ratio. What is ratio? A ratio is a relationship between two items. Like gross profit ratio is a relationship between gross profit and sales, right? Similarly, put the heading leverage analysis. The heading leverage analysis, under that write down one. Leverage in financial management refers to usage of debt. Leverage in financial management refers to usage of debt. Two, those entities that use debt are known as levered firms, and those entities that do not use any form of debt and run business only on own capital or equity are known as, you tell me, I don't know, fill in the blanks. Tell me in the chat box, these entities are known as unlevered firm. Correct. These are known as unlevered firms. Those entities that use debt are known as levered firms. Those entities that do not use any form of debt, these are 100% equity firms. They are known as unlevered firms. Okay. Now, particulars, X limited, Y limited. Okay, just I'm trying to give one example. Equity share capital, debentures, long-term loans, X limited, Y limited, Z limited. Okay, equity capital 100 crores, debentures 50 crores, long-term loans 0, total capital employed. Y limited 50, 50, 50. Z limited 75 0, sorry, 150 0 0. So can you tell me what is total capital employed of X Limited? Guys, can you tell me? What is capital employed of X Limited? 150. What is capital employed of Y Limited? 150. What is capital employed of Z Limited? 150. Correct. Can you tell me, out of these three firms, which one is levered? Which one is unlevered? Which are all the firms? Just categorize them. Nature. X Limited. X Limited. Levered, unlevered. X Limited is levered firm. Y Limited is also levered firm. Z Limited is unlevered firm. Okay, so you tell me, who pays interest? Who pays interest? X Limited, Y Limited, Z Limited? X Limited pays interest. Yes, they have to pay. Y Limited, yes. Z Limited, no. Okay, now tell me one thing. My third point is whether usage of debt is favorable or unfavorable. You tell me. If I am doing a business, should I borrow money or no? Okay, my question is, if you are doing business, is it advisable to borrow money or no? Is it advisable to borrow money or no? Okay. Guys, tell me, is it advisable to borrow money or no? Correct. Jeffin, what you are saying is right. What about others? What about others? See, I'll tell you one simple example. Debt for a company is like salt. Okay. Shall I use salt while cooking? The answer is obviously yes. If you do not include salt, whatever the dish is, you will not feel the taste. Okay. So, do you agree with me if I say salt adds to the taste of a dish? Yes or no? Tell me. Salt adds to the taste of dish. Yes or no? Yes. Having said that, if I put 1 kilo salt in curry, what will happen? Take that curry, throw it in dustbin. That's all. Too much of debt will create unnecessary financial risk, and eventually the company will go into liquidation. There are many examples. Reliance Communication, Anil Dhirubhai Ambani Group. All the companies in Anil Dhirubhai Ambani Group, why they, they were bleeding till liquidation? It is because of debt. What happened to Jet Airways? Debt. What happened to Kingfisher Airlines? Debt. Too much of debt which you cannot handle, you should never take. Okay, now look here. Try to understand this point. Usage of debt in overall capital employed of a firm can be advantageous to the company and shareholders only if the company can earn more money by using that fund. Means what? Mathematically, if return on investment is greater than cost of capital, What is that? If return on investment is greater than cost of capital, usage of debt will be favorable. Why? Because it increases the EPS of the firm. It increases the return on equity. Shareholder will be happy. If return on investment is less than cost of capital, it is called unfavorable situation. It is called unfavorable. That means usage of debt is not justified. If debt is used, EPS will fall. So it all depends on, can you earn money? Say for example, I have taken 1 lakh rupees from State Bank of India at 10% interest rate. What I'll do with that 1 lakh rupees? With that 1 lakh rupees, can I earn more than 10%? If the answer is yes, then only I have to borrow, no? That is the reason any person who borrows money from a bank, just, personal loan, car loan, or housing loan to purchase a house, this is another name for stupidity. Actually, it should not be done. Actually, it should not be done, because you really do not know. See, if I have taken a personal loan, 10 lakh rupees personal loan I have taken. I am having a good corporate job. So literally companies are behind me. Every company is asking, Pavan, please take personal loan. We'll give you 10 lakhs loan. We'll give you 20 lakhs loan, because they know that I have income. They know that I have a decent job. They know that my CIBIL score is proper and I will not run away. So they are giving loans. But if I take 10 lakh rupees of personal loan, what will I do with the 10 lakhs? If I cannot generate money from my earnings, I have to pay it. No unnecessary headache for me. Why to pay EMI? But if I borrow 10 lakhs, imagine if I can construct a portfolio of investments. Like, I have invested money in Infosys shares. I have invested money in Tata Motors shares. I have invested money in some good company shares. And at the end of the year, I earned 30% returns. Out of that 30% returns, paying this 10% interest will not at all be a burden for me. Easily, I'll be able to pay. So simple. What is the rule? Borrow money only when you can earn more than interest rate. So guys, do you agree with me? All of you, do you agree with me? You understand this rule? You understand this rule? Now, point number 4. Doing business has an inherent element of risk. Do you agree with me? Doing business is always risky. Guys, I want participation from you. Do you agree with me if I say business has so many risks? Can you tell me what are the types of risks business face? What are various types of risks business face? Competition. Competition is not a risk in terms of financial management. Competition is not a risk. Competition is a situation. Don't give your banana strategic management answers here. Okay, idiots. Financial risk, correct. Financial risk, correct. Operating risk, correct. Default risk, exchange risk, interest rate risk, economic risk. These are the risks. Okay, for example, consider Infosys. They have a client in US. They have a client in US. They have rendered some service wherein the client has to pay $1 million. Now my risk is, when I rendered service, dollar rate is 77. But when I'm receiving money, if dollar rate is 72, I'm losing $1 million into 5 rupees. You understand this? This is called exchange risk. Okay. And if you take a bank has given loan to Mr. A. Mr. A defaulted repayment of loan and ran away. That is called credit risk, default risk. You are selling goods on credit and the customer is not paying money. You are selling goods on, you supplied goods on credit and the customer is not paying money to you. It is called default risk, credit risk. You understand? Geopolitical risk, because of, the fight is happening between Russia and Ukraine. So in financial management, in leverage analysis, we speak about 3 types of risks. Okay, what are the risks? A business, every business is exposed to A, operating risk, B, financial risk, C, combination of above 2. Combination of above 2. It is called combined risk. Combined risk. Okay. Can anyone tell me what is operating risk? Can anyone tell me what is operating risk? Hello, I'm waiting for your answer. Some students are now asking class link, what to do? Hello, no one is responding. What is operating risk? Usage of assets. Usage of assets with fixed cost. Usage of assets with fixed cost. For example, I have taken a building on lease and I need to pay fixed rentals. Okay, so this is risk, type of risk. This is reason. This is result. This is effect. Okay, so I'll try to explain you with this table. Okay, we'll prepare a table like this. So what is the reason why you have operating risk? Because you are employing certain assets in your business, and those assets, the nature of the asset is it will consume a fixed cost. For example, rents, salaries, depreciation, anything. I'm using human resources. I need to pay salary, fixed cost. I'm using physical resources like infrastructure, factories, buildings. I need to pay rents. I'm using machine. I need to, bear depreciation. Though I don't pay depreciation to anyone, still it is a fixed cost. So when I'm using asset with fixed cost, I ended up paying fixed cost irrespective of my profits. This is the problem. Pavan sir, huge profits are there. No problem. Happily pay money. Pavan sir, no profits, Pavan sir. Then also you have to pay all these things. 1 year if you are in losses, still the lessor will ask rentals, no? If you are in losses, will machine take 0 depreciation? No, still machine will give you the depreciation only. Isn't it? The effect is EBIT will suffer. Oh my God. EBIT will suffer. Because of this, EBIT will suffer. Now you tell me what is financial risk. Read the above line and tell me what is financial risk. Half an hour, after half an hour, now students are asking, sir, meeting link, sir. What to do with this people? Guys, can you tell me what should I write here? Anyone, please? It is usage of funds with fixed interest cost. Oh my God. For example, ventures, loans. What is the reason why financial risk is there? Now simple. Pavan sir, I don't have loans, Pavan sir. Your financial risk is zero. I don't have loans. Your financial risk is zero. Pavan sir, I have loans, Pavan sir. When you borrow money to employ that in your business, you end up paying fixed interest costs irrespective of profits. So you end up paying fixed interest cost irrespective of profits. Oh, Pavan sir, I have 10 crore rupees of profit this year, Pavan sir. I have to pay 1 crore rupees of interest. Happily pay, no problem. But what if 1 year you are in loss? Do you think your banker will waive a 60 EMIs you paid properly? 60 first EMI don't pay, no problem, because you are in losses now. Do you think banker will tell that? No. 60 EMIs you paid properly. 60 first EMI if you have not paid, they will send a notice to you. If the situation worsens, they'll take legal action. They'll auction your property. They'll treat you as NPA. Isn't it? That is the problem. What will be the effect? EPS will suffer. Oh my God. So operating risk has connection with EBIT. Financial risk has connection with EPS. You understand this? Guys, do you understand this? These points, whatever I have written there. So you use an asset with fixed cost, it will result in fixed cost operating risk. When you use a fund with a fixed financing cost, you end up paying interest, EPS will suffer. That is called financial risk. Combination of above two is this. Now, I'll tell you one secret. Operating risk comes out of investment decisions. I invested money in a factory. I invested money on an asset. I invested money on a building. I invested money on a machine. I invested money on a plant. From that investment decision, asset comes. From that asset, fixed cost comes. Pavan sir, what if I purchased factory, Pavan sir? I bought, no loan, cash rich. I have bought a factory with 100 crores cash. Still better you will have operating risk because depreciation will be there. Isn't it? Depreciation is also a cost. So from your investment decisions, you will have operating risk. Financial risk comes out of what? Can you tell me? Financing decisions. I have taken a decision to borrow money. Then only financial risk comes. So combination of above. Now you tell me, operating risk is measured by which leverage? Hello. You tell me, operating leverage is measured by which leverage? You might have studied all these things, no? Basics. Operating risk is measured by operating leverage. Financial risk is measured by financial leverage. Combined risk is measured by combined leverage. That's all. So point number 5. Leverage. Leverage is a measurement of risk. Leverage is a measurement of risk. 6. Leverage analysis refers to study of relationships between two variables. Leverage analysis refers to study of relationship between two variables. What are various financial variables? Various financial variables are sales, contribution, operating profits, which we call EBIT, profit before tax, profit after tax, EPS, etc. Everything in this, if you observe, it depends on the previous line. Contribution depends on the sales and variable cost. EBIT depends on the previous line, fixed cost. Profit before tax will depend on above line, interest. So various financial variables are sales, contribution, operating profits, profits before tax, profit after tax, EPS. These are called financial variables. Now we want to study relationship between them. Eight. Operating risk is measured by operating leverage. Financial risk is measured by financial leverage. Combined risk, overall business risk, is measured by combined leverage. Operating risk is measured by operating leverage. Financial risk is measured by financial leverage. Combination of both is measured by combined leverage. You understand? Okay. Now, income statement. Also, this is calculation of EPS. From income statement, we are calculating EPS. So write down particulars, amount rupees. So first I'll write sales. Now you tell me after sales what to do. As per marginal costing technique, after sales, next line you tell me, I don't know. Sandeep, turn on the mic. Sandeep, say hi.
Hi, sir.
After sales, what will you do?
Deduct variable cost.
Very good. After that,
we will get contribution.
Very good. After that,
plus fixed cost.
After that,
profit.
Operating profit, EBIT.
EBIT.
Okay. After that,
plus interest.
After that,
EBT.
PBT or EBT, anything is same. Okay. After that,
plus tax.
What will you get?
PAT.
PAT or EAT, same. Next, after that,
preference dividend.
After that,
earnings available to shareholders.
Earnings available to shareholders. ETESH. Earnings available to equity shareholders. Okay. Then what will you do?
Then divide that by number of equity shares and earnings per share.
That's all. So everybody knows this pro forma. This pro forma is not new to you. All of you know this pro forma, right? Guys, everybody please respond in the chat box. You know this pro forma? Very good. Very good. Now, first ratio we calculate in leverage analysis is operating leverage. Operating leverage is a relationship between this and this. Right on next point. Already we have written 8 points. Now 9th point. Operating leverage is a relationship between contribution and EBIT. Next, write down formula. Therefore, operating leverage is equal to contribution divided by EBIT. Put it in box. Okay. Operating leverage is equal to contribution by EBIT. Operating leverage is equal to contribution by EBIT. That shows the relationship between contribution and EBIT. So if my EBIT is 100 rupees, what is my contribution? Isn't it? Put it in mute, everybody, please. Okay. So a high operating leverage signifies what? A high operating leverage. A high operating leverage signifies high risk. No, not high contribution, high risk. A high operating leverage signifies high risk. Okay. Next, financial leverage is a ratio between, you tell me. Guys, you tell me financial leverage is a ratio between. Hello, any response? Financial leverage is a ratio between EBIT and EBT. This one and this one. EBIT and EBT. Like how gross profit ratio is a ratio between gross profit and sales. It has a meaning, but it is bloody formula at the end of the day. That's all. Numerator by denominator. It has a meaning, it has analysis, it has interpretation. But still at the end of the day, it is A by B. So like that, financial leverage is a ratio between, is a relationship between EBIT and EBT. So write down EBIT by EBT. Any leverage, high leverage represents high risk. Here also, high financial leverage represents high financial risk. High operating leverage represents high operating risk. So financial leverage is equal to EBIT by EBT. Okay. Next ratio is combined leverage. Okay, right now combined leverage is equal to, can I say combined leverage is equal to a combination of operating leverage and financial leverage? Combined leverage is equal to operating leverage and financial leverage. Correct now? Okay, so combined leverage is equal to operating leverage into financial leverage. What is operating leverage? Contribution by EBIT. What is financial leverage? EBIT by EBT. So in combined leverage, when you multiply these two, this and this will be cancelled. Therefore, formula will be contribution by EBT. You understand this? Basic calculations all. So combined leverage is equal to contribution by EBT. It shows the difference. It shows the relationship between contribution and profit before tax. That's all. Okay. Now, guys, remember one thing. Okay. Many people do not know this. Remember one thing. Operating leverage is equal to degree of operating leverage. Financial leverage is equal to degree of financial leverage. Combined leverage is equal to degree of combined leverage. There is no difference between operating leverage and degree of operating leverage. That is the reason formula will be different. That is the reason sometimes in the question they'll ask you calculate degree of operating leverage. But what you do is you will calculate only leverage. You will not apply degree of operating leverage formula. Why? I'll tell you. Before that, write down the formula. Degree of operating leverage is equal to percentage changes in EBIT by percentage changes in sales. In short, you can also write it as delta EBIT, delta represents change, divided by delta sales. Percentage changes in EBIT by percentage change in sales. Okay. So what is the next formula? Degree of financial leverage is equal to delta EPS by delta EBIT. delta EPS by delta EBIT. Okay. So what is the next formula? Degree of combined leverage, DCL, is equal to same thing. When you multiply this two, when you multiply this and this, here delta EBIT is there cancelled. Here delta EBIT is there is cancelled. So delta EPS by delta sales. That's all. Degree of combined leverage is equal to delta EPS by delta sales. Now let us understand. Many people do not understand the formula. Now let us understand. DOL, degree of operating leverage, is equal to 3. Imagine, just numeric example. It can be 2, 3, 4, 5, 1.5, 1.25. It can be anything. So degree of operating leverage is equal to 3. Means, what is the meaning of this? Means if sales increases or decreases by 1x, if sales moves, changes, remember, a change can be upward or a change can be downward. When I say change, see here the symbol used is change. That can be positive, plus, that can be negative, minus. So if my sales change by 1x, then my operating profit will go in same direction by 3x. What is the meaning of DOL3? DOL explains the relationship between sales and EBIT. DFL explains the relationship between EBIT, EPS. DCL explains the relation between EPS and sales. So if my sales change by 1x, what is the meaning of DOL3? That means my operating profit will change by 3x. That's all. So it is basically elementary fundamental mathematics. Fundamental mathematics says ratio is equal to A by B, correct? What is the meaning of this? In your 7th class also you might have studied. If B changes by X, A will change by ratio into X. So denominator is the base. Denominator is the base. If denominator changes by X, numerator will change by this into this. So take gross profit ratio. Gross profit ratio is equal to gross profit by sales into 100. Correct? Gross profit ratio is gross profit by sales into 100. If my sales, say gross profit ratio 20%, for example, that means if my sales increases by 100 rupees, gross profit will increase by 20 rupees. Padam dishum. That's all. There is no nuclear science in this. If my denominator changes by 100, numerator will change by so and so percentage. That is ratio. All the leverages are like that. But the difference is, Pavan sir, operating leverage, we calculate contribution by EBIT. Degree of operating leverage, we calculate as delta EBIT by delta sales. But you are saying both of them are same. How come, Pavan sir? We are using two different formulae. Many students will ask this. We are using two different formulae. How can you say it is same? Okay, let us see. Let us see. So I'll take the data for 2 years. Okay, so there is one X Limited particulars. This is for 2022. This is for 2021. Okay, first we'll take 2021, then we take 2022. Okay, sales. Imagine 1 lakh. Okay, next year, imagine it is 1,20,000. Variable cost, imagine 60%. All are numeric, just assumptions only. Guys, can you tell me what is variable cost of 2021? Hello. I want you to tell me the answer, bloody. 60,000, correct. Okay, next year. Everybody, please participate. The more you interact, the more you learn. Okay, if you are not participating, go and watch video class only, no recorded. Why live? Waste of energy. Already I recorded everything. Okay, if you are not participating, what is the difference between a recorded class and live class? 72, correct. 72,000. Okay, now tell me contribution. Is it 40,000 here and 48,000 here? Very good. Now fixed cost. We assume say 20,000. Fixed cost remains same. So calculate EBIT. Guys, can you calculate EBIT and tell me? First year 20,000 I calculated. Second year. Seriously. 28,000. Correct. Okay. Now, can you guys calculate A percentage change in sales from 2021 to 2022? Can you calculate percentage change in sales? How will you calculate percentage change in sales? Percentage change in sales from 2021 to 2022 is equal to, remember the rule, current year minus previous year divided by previous year into 100. Always, you might have studied this in statistics also, okay? Always change, whether it is increase or decrease, change is equal to current year minus previous year by previous year into 100. What is current year? Current year sale is 1,20,000, correct? Current year sale is 1,20,000 minus, guys, tell me previous year. 1 lakh divided by previous year, 1 lakh into 100. Okay, 120 minus 100 is 20,000 divided by 1 lakh into 100. Can I say 20%? Okay, so can I write 20 here? Percentage change in sales is 20. B, guys, you calculate and tell me. I do not know. I don't want to tell you. Percentage change in EBIT from 2021 to 2022 is equal to how much? Hello, I am waiting for your answer. Everybody is saying 40, so I'm assuming it is 40. I don't know. I'm assuming it is 40. Okay, C. Can you calculate degree of operating leverage? Degree of operating leverage. Is it percentage change in EBIT by percentage change in sales? Is it 40 divided by 20? That is equal to, is it 2 times? Am I right? Guys, am I right? Okay. Good. So you understand degree of operating leverage is 2 times. Now, ignore all this. Ignore all this. Ignore all this. Just calculate. Contribution is there. EBIT is there. So operating leverage is equal to contribution by EBIT. 40,000 divided by 20,000. How much? 2 times. So whether you calculate operating leverage or degree of operating leverage, it will result in same. For 2022, if you calculate, that could be different. Okay, we are speaking about the base year. Now, try to understand, to calculate operating leverage, 1 period data is enough. But to calculate degree of operating leverage, 2 period data is required, because if 2 period data is not there, how can I calculate change? How can I calculate percentage increase, percentage decrease? So operating leverage or leverage for any matter, leverage is an absolute measure, A by B. A is a number, B is a number. But degree of leverage is a relative measure. To calculate absolute measure, one period data is enough. But to calculate relative measure, 2 period data is required. So in the question, if they are giving only 1 period data, you calculate leverages. In the question, if they give 2 periods data, then you can calculate degree of leverages. That's all. So what is the conclusion? The conclusion is this. Degree of operating leverage is equal to degree of operating leverage. Financial leverage is equal to degree of financial leverage. Combined leverage is equal to degree of combined leverage. That's all. You understand? So much of theory. Actually, I am not supposed to explain this much. I am supposed to make you work a lot. We will solve some problems now. Guys, are you ready? Shall we go to the problems? All these things we have discussed. The ratios you have seen. All these formulae, you know. Okay. So, Kaushita, can you read problem number 1, ma? Kaushita, unmute your mic. Can you read problem number 1, please? Kaushita,
Yes,
hi,
sir.
bolo.
Yes. Hi, sir.
Hi, where are you from?
I'm from AP, sir, Andhra Pradesh,
Andhra Pradesh. Which part of Andhra Pradesh?
Rayalaseema,
Rayalaseema. Ah, come on. In Rayalaseema, where?
Anantapur district, sir.
Very good. Super. So, read problem number 1, ma.
Problem number 1. The data relating to two companies are as given below. So, particulars, company A, company B, equity capital 6 lakhs, 3 lakh 50,000, 12% debentures 4 lakhs, 6 lakh 50,000, output in units per annum 60,000, 15,000, selling price per unit 250, fixed cost per annum 7 lakhs, 14 lakhs, variable cost per unit 10, 75. You are required to calculate the operating leverage, financial leverage, and combined leverage of two companies.
Super. So, tell me one thing. What is the interest payable by A?
48,000.
Okay. What is the interest payable by B?
78,000.
Correct. So, first thing, remember, whatever the question is, you have to prepare income statement. So, shall we start problem 1 with income statement? Particulars. Company A, company B. Okay. Guys, look at the problem and can you tell me sales of company A? Kaushita, what is the sale revenue of company A?
$18 lakhs, sir.
18 lakhs. Correct. What about B? Multiply units with selling price, ma. That's all.
Yeah. 8 crore 75 lakhs.
I got 37 lakhs 50,000. You got 8 crores. Rayalaseema has become very rich. 15,000 units into 150 rupees, ma. Guys, you got 37 lakhs 50,000. Hello, please tell me what is sales. Less variable cost. Okay. Now, per unit variable cost is 10 rupees. You are selling 60,000 units. Can you tell me what is variable cost of company A? Kaushita, what is variable cost of company A? 6 lakhs bolo.
Yes, sir, 6 lakhs.
What about company B?
11 lakhs 25,000.
Very good. So calculate contribution.
12 lakhs.
Okay. For company B?
2 lakh 62,500.
I will
Sorry, sir.
kill
26 lakh 25,000.
you. Less fixed cost. Fixed cost how much, ma? 100 times you need to read the problem. One time if you read the problem, you should remember, okay?
7 lakhs
7 lakhs, 14 lakhs.
and 14 lakhs.
So now tell me EBAT.
It's 5 lakhs.
Next.
12 lakhs 25,000.
Okay. Now what to do? Who will calculate this 6? I will calculate or you will calculate? Oh, hello, everybody. Calculate and tell me the answers. Take operating leverage is equal to, take contribution 12 lakhs divided by, oh, interest is also there. Oh, hello. Wait, interest is also there. Wait, less interest. When I am writing ratios, not even a single student is saying, sir, interest is also there, sir, consider that, sir. Kaushita, tell me, ma, interest of first company, how much?
72,000 second.
First company, 48. Now tell me, EBT, how much?
4,52,000. 11,52,000.
Excellent. So, guys, do this. Don't take screenshots, because even if you take screenshot also, your mobile will have 2,500 screenshots at the end of the batch, but you will not remember what is for what and all. You will be confused unnecessarily. Phone memory will be gone, and then you will delete everything. And then you will text me, sir, problem number 1, solution is there, sir, please, sir. Solve it. No screenshots. Solve it yourself. Tell me, ma, how much you got operating leverage here?
2.4.
2.4. Okay. Next operating leverage?
2.14.
2.14. Okay. Guys, remaining people tell me financial leverage, how much? You tell me, ma, financial leverage, how much you got?
1.106.
Next one?
That's it, sir. I did that much.
Okay. Combined leverage? Guys, anyone did combined leverage? Hello? Anyone completed combined leverage? Very good, Sandeep. 2.64 is correct answer. What about the second one? When you calculate with calculator, it could be little different, because I'm taking Excel formula, no? So it takes all the digits after the decimal. So don't worry about it. So finally, these should be your answers. 2.4, 2.14, 1.11, 1.06, 2.65, 2.28. That's all. Little difference in the answer is allowed, because you are using calculator, I'm using computer. No problem. Now tell me, how many of you understood question number 1? If you understand question number 1, say yes in the chat box. Say yes. Abraham is saying yes. What about others? Lijo, yes. Sandeep, yes. Andrina, Mary, Jeffin, Brinda, Kaushita. What about remaining people? Ashok. Very good. So shall we go to next question? Shall we go to next question? Okay. So Sandeep, read question number 2.
Calculate the degree of operating leverage, degree of financial leverage, and degree of combined leverage for the following firms and interpret the results.
Wait, but we will not calculate degree of leverages. We'll calculate only leverages. Why?
Because only 1 year data is given.
Excellent. Correct. That is one. Second thing is, when they asked you to interpret the results in the exam, they will allocate marks for this also. That is very important. So
Okay,
you
sir.
need to write interpretation also. So what is interpretation? Simple. Interpretation is very simple. How we write, for example, say P has operating leverage 3, Q has operating leverage 4, R has operating leverage 5, for example. Then we write the operating risk of company R is highest since it has a high operating leverage. That is interpretation, standard. So whichever company's leverage is higher, you will tell they have high risk. That is the interpretation. You understand, all of you? Hello?
Yes, sir.
You understand how to write interpretation? Company so and so has high operating risk because of high operating leverage. Company so and so has high financial risk. Company so and so has high overall risk. Like that, you need to write. Okay, so they have given output, they have given fixed cost, variable cost, interest expense, selling price. So don't you think it is same copy paste of above problem, but in above problem 2 companies are there, in this 3 companies are there. Isn't it same one? Hello, all of you? Sandeep?
Yes, sir. It's the same.
Yes, solve this problem. I'm giving you 1 minute of time. 1 minute means 60 seconds. Okay, in 60 seconds it should be over. Do it. Do it fast. Do it fast. Once you are done in the chat box, say, once you are done in the chat box, say done. Then we'll go ahead. Once you are done, let me know. Tell me the answers, please. Guys, are you done with this? Still doing? Oh, you want question to be shown? This is the question. I will become 60 years old senior citizen and I will sleep here till that time you'll be doing this problem only. So is it because it is beginning of the batch, so you are slow, or naturally you are slow only? One guy is saying done, sir. Aha, thank God. Right, tell me the answers.
Sir, operating leverage P 2.4.
Wait 1 second. Let me open. The answers are there probably here. Oh, only problems are there here. Solutions will be in another document. I will not give you, but I have solutions. Assignment problems here also no solutions. Oh my God. Solutions चाहिए हमें solutions. Where is leverage analysis session answers? Okay, operating leverage 2.4, 2.14, 1.6. Lijo is saying okay. What about the other one? Tell the remaining ratios also. Where is the calculation? No calculation. Ew. FL 1.11, 1.069. Okay, is it this problem? Hello, is it this problem which is on the screen? Can you please confirm, guys? So check your answers. So how many of you got all these answers correct? How many of you got all these answers correct? Tell me. If you got all these answers correct, say yes. Abraham got all correct. Rosna got all correct. Vrinda, Kaushita, Ashok, Sandeep. And everybody is saying everything is correct. One answer is wrong. No problem. Doesn't matter. Doesn't matter. So with this happiness, shall we go to next problem? Hello, 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 hello. Can we go to next problem? Okay, Andrina, read this now. Problem number 3.
Hello, sir.
Yes. Hi. Read this question, please.
Our firm details are as under: sales at 100 per unit, rupees 24 lakh, variable cost 50%,
Wait,
fixed
tell me
cost
variable cost in rupees.
12 lakh,
Very good. Contribution.
contribution 12 lakh,
Fixed cost.
10 lakh.
Then EBIT.
What was
12 minus 10
2 lakh,
rubber
2
manda.
lakh, 2 lakh. Oh, sorry, 2 lakh.
Contribution 12 lakhs. Fixed cost 10 lakh. EBIT how much?
2 lakh.
Correct. Continue.
It has borrowed rupees 10 lakh at 10% per annum
Wait.
and its equity share capital.
Hello. Wait. Interest how much?
Yes. 1 lakh.
Are you sure?
Yes.
How?
It has borrowed. 10 lakh.
Hmm.
Debt.
Okay. EBIT how much?
10%. EBIT 2 lakh.
Interest how much?
1 lakh.
EBT how much?
1 lakh.
Correct. Continue.
And its equity share capital is 10 lakh
Wait.
rupees 100 each.
Capital employed how much?
20 lakh.
Very good. Capital employed means debt plus equity. Correct?
Equity.
So
Yes.
total 20 lakhs. What is your EBIT?
EBIT 2 lakh.
2 lakh. Capital employed?
Yes. 20 lakh.
EBIT? Hello?
Hello, I lost the connection, sir. Sorry.
EBIT how much?
I couldn't hear. EBIT 2 lakh.
Capital employed?
20 lakh.
Return on investment how much?
Return on investment. I don't know how to find that, sir.
Ask remaining people.
How will I find EBIT?
Guys.
ROI, sorry. ROI.
Guys, how to calculate ROI? Ask them. Someone will tell you.
So, tell me.
Ask properly. You're not asking properly, so no one is telling.
Sorry, sir. Someone can tell me how to calculate ROI.
One answer came. See in the chat box.
Okay. EBIT by capital number.
Into 100, who will put? Your grandmother will come. Ray, in formula, where is into 100? Very good. Correct. Now calculate and tell me.
10. ROI 10, sir.
Now, who will put percentage after 10?
10%, sir.
Very good. Correct. Now read the problem.
Calculate operating leverage, financial leverage, combined leverage, return on investment. If the sale increases by 6 lakh, what will be new EBIT?
Super. Shall we do it?
Yes.
Okay. Bolo, sales how much? You have to put heading of the problem. After that, you need to put income statement. After that, you need to put particulars rupees. After that, you'll write this. Sales. How much, ma'am?
How much was it? 24 lakh. Right. Yeah.
How much?
24 lakh. We see 12 lakh.
Next.
12 lakh.
Next.
10 lakh.
Next.
2 lakh.
Interest how much?
There was 10 lakh. I forgot. Oh, 1 lakh. Sorry, sir.
EBT how much?
EBT 1 lakh.
Operating leverage, financial leverage, combined leverage, return on investment. Tell me how much it is.
Oh my gosh.
Hello, madam.
Yes, I'm here, sir. EB. 6 lakh.
6 lakhs. So
Sorry, 6. Sorry.
6 kgs or liters?
6 times.
Very good. 6 times. Correct. Financial leverage.
BRT by T. 2 by 1.
No, 1 lakh.
2 times.
Lakh.
2 times.
2 times. Correct. Then what
12.
about combined leverage?
12 times.
Correct. Return on investment.
Return on investment 10%.
10%. Okay, guys, all of you understand up to this? Up to this, everybody understand? Please let me know. Say yes if you understand it, so that we can move further. You understand it? Very good. Now, if, what is the last question? Last part. If sales increases by 6 lakhs, what will be new EBIT? Okay. Now, present sales 24 lakhs, correct? And in a present sales 24 lakhs. Do you agree with me?
Yes.
If it increases by 6 lakhs, what will be new sale?
30 lakh.
30 lakh. Variable cost 50%. So can you calculate and tell me variable cost?
15 lakh.
15 lakhs. Contribution,
15 lakh.
fixed cost.
Fixed cost 10 lakh.
Will it change?
No.
No. So EBIT how much?
5 lakh.
So the answer to the given question is over. What is given question? If the sales increases by 6 lakhs, what will be new EBIT?
EBIT.
Simple. Answer is if
Yes.
sales increases by 6 lakhs, new EBIT will be 5 lakhs.
Lakhs.
You understand?
Yes.
But you should not solve problem like this. Answer is correct, but procedure is not professional. If you write like this, ICA will not give you marks. Hello, madam.
Yes, sir.
Every problem has 3 answers. How many answers?
3 answers.
3 answers. One is correct answer. One is wrong answer. What is first one? Correct answer. What is second
Correct
one?
answer. Wrong answer.
Third one, ICI answer.
Answer.
So if you want marks, if you write correct answer, you will not get marks. You have to write ICI
I
answer.
see where.
Correct.
Yes, sir.
Now what is ICI answer? ICI will tell you answer is like this. So ICI, dear ICI, how will you do this? Now look here. What is operating leverage? In the question, we calculated operating leverage. It is 6 times, correct?
6 times. Yes.
Okay, that means percentage changes in EBIT divided by percentage changes in sales is equal to 6 times, correct?
Yes.
Now, percentage changes in EBIT we don't know, but sales we know.
Yes.
Earlier sales 24 lakhs, now it is 25% increase. They have given clearly. So delta EBIT divided by 25, which is delta sales given in the question, is equal to 6. From this, can I say delta EBIT is equal to 150?
Yes.
By way of cross multiplication, 6 into 25, 150.
Yes.
So EBIT will increase by 150%. What is old EBIT? Old EBIT is 2 lakhs.
2 lakh.
Old EBIT is 2 lakhs. So new EBIT will be 2 lakhs plus 150%.
Plus 150%. 5 lakh.
5 lakhs. This is correct answer. Now Chintu will tell, Sare, I also got the same answer, na Sare. Sare, but I did not get marks, Sare. This is the problem. Student will do this. Answer is correct. He believes he will get 4 out of 4. But ICA will give only 3 marks to you. Only 2 marks to you. They will say, like this, it should be done. One disgruntled student will write a letter to ICA. Dear sir, what is the mistake in my answer, sir? Then ICA will tell, beta, when you solved problem like this, where is the concept of leverage? So leverage analysis problem should be solved using leverage, no? So guys, all of you understand this answer? Beautiful
Yes.
ICI answer. Hello, everybody understood this answer? If you understand, yes, bolo, then we'll move further. So have you copied this answer? So this question is over. Third question is also over. And madam, shall we go to fourth question?
Yes, sir.
Read question number 4.
Yes. A firm sells its only product at rupees 10 per unit.
Super.
Its variable Variable cost ratio is 70%.
Wait, what is
While
variable cost in terms of rupees?
7
Per unit 7, correct. Excellent.
per
Next.
unit. While fixed costs are rupees 1,000,
Hmm.
present sales are 1,000 units.
Wait, what
Required
is
to
total
find
sales
out.
revenue?
Total sales.
Hello, sales revenue.
I forgot the question, sir.
1,000 units you are selling, ma. 1 unit is
Yeah.
10 rupees. Sir.
Yeah.
What is
One,
sales?
one unit, how many rupees?
1
10.
unit 10 rupees.
Okay. 10,000. I couldn't read the question, sir. Sorry.
Less variable cost.
Variable cost. How much was it?
When you read question, you should remember it. 70% you only told you.
Yeah. Yeah. I'm sorry, sir.
Hey, you watch Tamil movies?
Yes. Sometimes.
Okay. Who's your
Yes.
favorite hero?
Surya.
Surya. Very good. Surya acted in one exceptionally brilliant movie. That movie's name is Gajini. In
Like that, I think.
in Gajini, Surya remembers things only for 15 minutes.
Yeah.
If a person who remembers things for 15 minutes himself is an idiot, one great noble person from Kerala forgets 70% in 3 seconds.
Sorry,
So
sir. I'm just
we should
so
we should
stressed.
call Murugadas and say, sir, we found real Gajini, sir. Please take Gajini 2.0, sir. Please, sir. When you read a question,
Sorry, sir.
it's okay, ma. Just for fun, I am telling. Okay, so this is for everyone. If in your place other student is there also, they would have done the same thing. But what I am saying is, now imagine if you need to look at the problem for every calculation. So imagine you have, this is your answer sheet. Okay, you are writing exam.
Yes.
Sales, how much? Sale, 10,000. Okay, less variable cost. How much? 70%. Like that, if you are doing, how many times you have to read the question?
Yes. So many.
An average student looks into the question in FM 6 times, in accounts 25 times. When you are doing amalgamation or consolidation, how big problem will be? Then everything, when you write reserve, where is reserve, where is reserve, where is reserve, like that, if you search, how much of time waste?
Yeah.
Can you develop your skill of reading question once and writing the full answer? If you can do that, obviously you'll be a ranker. You do not believe me? If you don't believe me, look at me. I do that as a student. I'm not saying today I'm doing it. As a student, I did that. So I read the question. The quality of reading should be like, if I read the question, you have to remember everything and you have to put it properly.
Nice.
That will improve your speed.
Yes, sir.
Okay, you have to, guys, all of you, you need to practice it. Okay. Every time student writes CA inter CA final exam, after coming out, they'll say, sir, paper is difficult, I couldn't write, sir. Sir, paper is easy, I couldn't complete, sir. Sir, paper is lengthy, sir. That means what? In bracket, I am idiot, sir. And how shameful it is to say, sir, paper is actually easy, sir, but I couldn't write all questions, sir. I feel like slapping them, but I'll say, but it's okay. Don't worry. Don't worry. Okay. So please read for the next chapter, next subject and all, we'll tell you. But somewhere back of my mind, I feel like taking hair and banging onto the wall and say, idiot, when the question paper is easy, you have to write, no, shameless guy. But teachers, no, we are expected to behave nice. So I will do Greek meditation in my mind. 3, 2, 1, Chandramukhi, Niche Ajav, and then we'll say, it's okay, ma, no problem. So the paper in general is difficult only. Our paper is lengthy. Don't worry. Prepare for next exam. It is only to pacify you. But the fact remains same that you are an idiot.
Yes, sir.
Now shall we solve the problem?
Yes.
Okay, now what you do is read this whole question, just 4 lines question, and you have to remember everything.
Right.
Read the question and remember everything. Are you done?
Almost. Yes, sir.
Okay. Tell me, variable cost.
7,000.
Eh?
7,000.
Contribution,
3,000.
fixed cost,
1,000.
EBIT,
2,000.
operating leverage,
Operating leverage.
that will not be given in question. You need to calculate. 3 by 2 is 1.5.
Yes, 1.5. 1.5, sir.
After class, you know my WhatsApp number?
Yes.
So send your live location. I'll come and kill you.
I'm so scared, sir. That's it.
It's okay. Financial leverage, how much?
Financial leverage. Sir, EBT.
How much is EBT? In this
How
question,
much?
where is EBT? The question is only about operating leverage.
Oh, yes.
So financial leverage will not be there. So the problem is over here. Now
Yes.
they are giving you different situations. What is situation 1? What will see? First they asked you to calculate DOL, that you have calculated. What is DOL? 1 point.
Yes.
Then they're asking you what will happen if sales increases by 40%, if sales decreases by 25%. So we'll write A, operating leverage is equal to 1.5 times. B, if sales increases by 40%, what will happen to EBIT? What will happen to EBIT? Simple. Again, you have to keep this equation in your mind. Same calculation. Degree of operating leverage is equal to delta EBIT by delta sales. Correct?
Yes.
Degree of operating leverage 1.5. Correct?
1.5. Yes.
Delta EBIT we don't know, but delta sales they said 40.
Yes.
Therefore, delta EBIT is equal to 60. Correct?
Yes.
So EBIT will increase by 60%.
Yes.
New EBIT is equal to what is old EBIT?
2,000.
2000. 1000.
Yes. 2,000.
Very good. 2000. Old EBIT 2000 plus 60%.
3,200.
This is the answer. Next point, C. If sales decreases by 25, 1.5 is equal to delta EBIT by minus 25. Therefore, delta EBIT is equal to minus 37.5. Therefore, EBIT will decrease by 37.5%.
Yes.
If sales decreases by 25%, EBIT decreases by 37.5. So new EBIT is equal to old EBIT how much? 2000 minus 37.5 percentage. Can you tell me how much it is?
1,250. 1,250.
That's all. So this is answer
yes.
for B bit and C bit. Guys, do you understand this?
Yes.
All of you. All of you guys, do you understand this B bit and C bit? Now, please be careful, folks, please be careful. D bit is important. D. By what percentage should sales fall before the firm starts incurring losses? By what percentage should sales fall before the firm starts incurring losses? What is the meaning of before the firm starts incurring losses? EBIT should be 0. After EBIT is 0 only, negative zone starts, no? So they mean to say EBIT is 0. Sandeep, excellent, correct. EBIT is 0. So what is present EBIT?
2000.
2000. In future, what will be EBIT?
0.
In future, what will be EBIT? 0.
0.
Now, looking at this, can you tell me what is percentage fall in EBIT?
1000.
Anything will become 0
100.
when the
100%.
decrease rate is 100%.
Yes.
Same formula we use. We know degree of operating leverage is equal to delta EBIT by delta sales is equal to 1.5. Now we know that delta EBIT is 100 divided by delta sales is equal to 1.5.
1.5.
Now delta sales is equal to 100 divided by 1.5
66.66%
is equal to, this is minus 100 minus.
Yes.
Minus 66.67%.
0.66%. Yeah.
Correct?
Yes, sir.
Therefore, old sales how much?
10,000.
New sales how much?
New sales 3,333.
Excellent. Correct. Correct. Guys, do you understand this? All of you, guys, do you understand this? Very good. Now, the same problem will solve in some other way. This problem is given in which subject, ma? Hello, madam.
Yes, sir.
This problem is given in which subject?
FM.
FM. Had it been costing, if it is given in costing, from costing point of view, tell me, what is the point? What is the point you reach before going into loss zone?
Break-even point.
Break-even point. So they're asking you to calculate break-even point. Fixed cost, you know,
Yes.
1000. PV ratio, you know, sales minus variable cost, 30%. So
30%.
take calculator, take 1000 divided by 30%.
3,333.
So this is costing answer.
Yes.
Wow, sir, you have brain, sir. Congratulations. But if you do this in FM, they'll not give you marks.
Yeah.
Why? It is correct answer, but not ICI answer.
Yes.
Okay, are we done with this problem?
Yes, sir.
Hello.
Yes, sir.
Read fifth problem.
Okay.
So,
Consider
guys,
the
you have copied problem number 4 answer. You need to note down simultaneously. Now I am very sure, Andrina, you might not have written that answer.
No, I have, sir.
Very good. Read problem number 5.
Consider the following information for Omega Limited. Particulars rupees. Earnings before interest and tax, EBIT, 15,750. Earnings before tax, 10,000. Fixed operating cost, 1,575. You are required to calculate the percentage change in earnings per share if the sales increase by 5%.
Tell me one thing. What is the ratio that speaks about EPS and sales connection? What is the ratio that speaks? What is the leverage that speaks about EPS and sales? Operating a financial or combined?
Financial combined.
Confirm.
Yes, sir.
Pakka.
Yes, sir.
Tell me formula.
Delta EPS by delta sales.
Delta EPS by delta sales. Correct. Dana Noma. It is not operating. It is not operating. It is combined. Okay. So I need to calculate degree of combined leverage or combined leverage. So what is combined leverage? Combined leverage formula bolo. Contribution by
Contribution by EBT.
Contribution by EBT. Correct?
Yes.
From the data, do you have EBT?
Yes.
Do you have contribution?
No.
Can you calculate contribution?
Can.
Look, this is the formula, correct? This is the pro
Yes.
forma. Look here.
Yes.
This is the pro forma. Okay. Now in this, do you have any data in the problem? EBIT 15,750. Okay. EBIT here write down 15,750. Okay.
Yes.
Less interest. EBT. No, not required also. Now, do you have any other data?
Fixed cost.
Oh, how much?
15,750.
Now, can you calculate this?
Yeah. 750 plus 17,325.
Correct. So can I write contribution is equal to fixed cost plus EBIT?
Yes.
How much it is?
325.
325. So combined leverage is equal to, can I say contribution by EBT?
Yes.
That is equal to contribution 17,325
Yes.
divided by EBT is given in the question directly 7,000.
7,000.
Calculate and tell me.
2.475.
2.475. Correct?
5.
Guys, all
Yes.
of you understand this 2.475 calculation? Everybody understood? Okay. Now what they are asking in the question, read it carefully. You are required to calculate percentage change in EPS if percentage change in sales is 5%. So I know that
5%.
degree of combined leverage is equal to how much? I know
2.475.
475. This is equal to, do I know this is delta EPS by delta sales?
Yes.
That implies 2.475 is equal to, what is delta EPS? I don't know. That is what I need to calculate.
Sales.
Divided by
5%.
what is sales?
5%.
Fine. Cross multiply.
Five.
When you are
Five.
writing the number in the formula, delta sales is 5. Don't write 5%.
Yes.
Then you will get wrong answers. Okay.
No, sir. No, sir.
Cross multiply and tell me delta EPS is equal to
12.375.
That's all. What is the meaning of this? If sales changes by 5%, EPS will change by 12.375%.
Percentage.
Understand?
Yes, sir.
Super, madam. Ask all other students whether they understood.
Whether you guys understood the question.
No, ask in your language.
Malayalam, sir.
എല്ലാവർക്കും മനസ്സിലായോ?
Super. Some students will get mental because we have students now. Some of them are responding. Okay. Some of them are like, what is this? Good. Anyway.
Thank you, sir.
So problem number 5 is over.
Yes.
Okay. Now problem number 6, classwork. Now you have to do in 10 seconds. How many seconds?
10 seconds.
Do it and tell me the answer. 10, 9, 8. No response. Your response will come after half an hour. Hello, madam. Take calculator, madam.
Yes, sir.
Madam, you
Yes,
have
sir.
calculator?
Yes.
Type what I am telling, okay? 1120
Yes.
plus 700
Yes. Attempt that. 1820
divided by 320
by 320.
into 5.
Into 5. Yeah. 28.437.
That is the answer.
Yeah, that is the answer.
How simple FM is. Just you need to know 1120 plus 700 divided by 320 into 5. Problem is khatam.
Yes.
Sir, you are one old fellow born along with Jesus Christ 2000 years back and teaching since last 150 years. We are small innocent people, big body, small brain. How will we do problems like that, sir? Now Chintu will get one doubt. Okay, people don't have brain, but they have this smartness. Okay, now Chintu will ask one doubt. Sir, if I can solve problem number 6 like what you said, 28.43 in 10 seconds as you expected, idiot, why will I pay money to you to join crash course or regular course or any course? I will also put one shop and I will start teaching now if I do this in 10 seconds. Correct, madam?
Yes. No.
Yes, sir. Very good.
No, I didn't mean that, sir. I just going
Chalo,
along
anyway,
with the question.
so now what I do is I will give you problem number 13, 14, 15, 16, 17, 18 classwork in 10 minutes. All problems together in they are bits, they are bits, small bits.
Yes, sir.
Okay, so we'll see you after how many minutes?
30 minutes.
10 minutes. I told 10 minutes break, 10 minutes to do this problem. So after 20 minutes, I'll see you. Or you want 5 minutes more?
Yes, sir. Yes, sir.
Okay. So 10 minutes break. 15 minutes, you're solving all these things. And then we'll sit together. Okay?
Okay.
So hi guys, welcome back. So I hope in the break I have given and in the time I have given to solve this, I hope you have solved all these things. So problem number 13 you have done. Vrinda, can you turn on the mic and say hi, ma?
Hi, sir.
Hi, Vrinda. How are you?
Good, sir. How are you?
I am good too. So you solved this problem 13?
Yes, sir.
Okay. What is the answer you got, ma?
So operating leverage for 25,000 units, 5, 30,000 units, 3.
Is it right? Guys, everybody, you got 5 for 25,000 units and 3 times for 30,000 units. The answer is correct answer. Andrina got it. Sandeep got it. Rojna Saji got it. Very good. Excellent. So the crux here is this 20,000 units is there, no? Since it is said that it is break-even point, there you need to take EBIT as 0. Fixed cost will be the balancing figure. So 20,000 into 14 minus 9. What is 14? Selling price minus variable cost 9. So contribution per unit is 5 rupees. 20,000 units into 5 rupees is 1 lakh. That is contribution. Minus fixed cost is profit. Since profit is 0, contribution is 1 lakh. Fixed cost is also 1 lakh. You understand this? So when you calculate fixed cost like that, in the next 2 columns also, you will put 1 lakh fixed cost. Then you will calculate EBIT. Then you calculate operating leverage. For 25,000 units, operating leverage will be 5 times. 30,000 units, operating leverage will be 3 times. So how many of you got this answer correct? I'm happy many people got. Very good. Excellent. So Vrinda, read problem number 14, ma.
Sir, should I read the question or the
Yes.
answer?
You have done that answer?
Yes, sir.
What?
Until 15 we have done.
Okay. So 14th question answer bolo.
We are asked to calculate EAT. EAT is 1750.
Earnings after tax 1750. Guys, what is your answer? How much you got? Everybody, can you please respond in the chat box? What is your answer? Sandeep 1750. Correct. Okay. Andrina, same. Lijo 1750. Correct. Very good. Super. Very good. So the production is 1000 units. Contribution is 60. So can you tell me what is total contribution, Vrinda?
Sir, 60,000.
60,000. Okay. So combined leverage is 24. Operating leverage is a trap here. Okay. Operating leverage you don't need to use because you are calculating EAT na straight. You can use combined leverage. So what is the combined leverage formula? Tell me.
Sir, operating leverage into financial leverage.
No. One other formula is there. Contribution by EBT.
Yes, sir.
Contribution by EBT. So contribution, 60,000 here. 60 into 1000.
Yes, sir.
Correct? So 60,000 divided by 24. How much?
$2,500, sir.
That 2,500 is what? It is EBT. EBT. See, it is like this. This problem, so many students will end up with the correct answer, but they do it in unnecessary long cut. There is a shortcut for this. Okay. So we know that combined leverage is equal to contribution by EBT. Correct? Contribution we know 60,000. Combined leverage we know 24. So 24 is equal to 60,000 divided by EBT. So can I say EBT is equal to 60,000 divided by 24, that comes to 2,500. EAT is equal to EBT minus tax. Tax rate is given 30%. So EAT is equal to EBT minus tax, that is equal to 2,500 minus 30%. So is it 1750?
Yes, sir.
So how many of you have done it like this? This is the easiest way of solving problem. Very good. Very good. Someone might have taken operating leverage, that this finally, if you get 1,750, it is same. Correct answer. So Vrinda, next question is copy paste, no?
Yes, sir.
So 15th question, what is the answer you got?
8750.
8750. Everybody got that? How many of you got 8750, guys? Very good. Excellent. Everybody is saying 8750. Correct. So what about 16th problem?
Sir, I did not do that.
Why?
Sir, I couldn't see the question completely.
Question was not visible. You don't have material? Seriously? You could have asked, no?
Sir, I asked in WhatsApp.
In WhatsApp? In between class, who will see WhatsApp? I went,
Sorry.
had coffee, came back. That's all. Ayyo. What is time?
Sir, 825.
825. Okay.
Yes,
So
sir.
16th problem is there on the screen. 17 is on the screen. 18 is on the screen. 16, 17, 18. I'm giving you 5 minutes of time. Complete this. All of you, I'm giving you 5 minutes of time now. Complete this. After that, 2 important models are there. We'll discuss that 2 models. With that, this chapter will be over. Other problems, if they are there, you do it as homework. Okay, there is no difficult question in this. 16, 17, 18, solve it in 5 minutes. I'm giving you 5 minutes of time. Solve it in 5 minutes. So guys, you are done with 16, 17, 18. Vrinda, tell me answer for 16.
Sir, 3. Operating leverage 3.
Okay.
Financial leverage 1.25.
Okay.
Combined leverage 3.75.
Guys, is that correct? All of you got same answers? Very good. Correct. Correct. All these are basics. Okay. 17. Go to 17th problem. Answer bolo 17.
Operating leverage 1.67, financial leverage 1.5,
Okay.
combined leverage 2.505.
Okay. Then
Return on investment 12.
return on investment 12.
Yes, sir.
12. Guys, all of you got that answer? Very good. Superb. So 18th problem. What is the answer for 18th problem?
So 1.33 operating leverage. Financial leverage 1.28. Combined leverage 1.705.
Okay, very good. Guys, all of you got those answers? Excellent. So everybody's saying. So 13, 14, 15 already we have done. So can I say 13 to the end of the chapter we have done? 13 to the end of the chapter we have done. So let us go back. Let us go back. So 11 and 12 are same model. Okay, 11 and 12 are as it is same model. I will teach you 11, 12 I will give you homework. So Vrinda, read question number 11.
A company had the following balance sheet as on 31st March 2006.
Okay.
Liabilities, equity share capital, 1 crore shares of rupees 10 each, 10 crores. Reserves and surplus 2 crores, 15% debentures 20 crores. Current liabilities 8 crores, total 40 crores. Fixed assets net 25 crores, current assets 15 crores, total 40 crores.
So fixed assets net means after charging depreciation. Gross block, net block we call, no, same. Net fixed assets means after depreciation. Okay, continue.
Yes. The additional information given is as under. Fixed costs per annum excluding interest 8 crores. Variable operating cost ratio 65%. Total assets turnover ratio 2.5. Income tax rate 40%.
Okay.
Required, calculate the following and comment. Earnings per share, operating leverage, financial leverage, combined leverage.
Tell me one thing, in the question whether they have given sales?
No, sir.
No. If sales is given, variable cost ratio they have given. So sales minus variable cost is contribution. Fixed cost they have given EBIT. Then interest they have given 15% debentures 20. So 20 into 15% 3. So you will calculate EBT. Problem is over. You don't have sales. That is the issue. If you have sales, you have variable cost, contribution will come. You have fixed cost, EBIT will come. You have interest, EBT will come. So you can calculate operating leverage, financial leverage, combined leverage, EPS easily. Now you tell me, how can we calculate sales? So which line of the problem is giving you hint? Which line of the problem is giving you hint? Total asset turnover ratio. Oh my God. How much it is? 2.5. Okay. Total asset turnover ratio is equal to 2.5. Now, can anyone tell me what is the formula? 2.5. Why 0? 2.5. Can anyone tell me what is the formula to calculate asset turnover ratio? Excellent. Sales by assets is equal to 2.5. Do you know assets? Assets are given in the problem. Balance sheet total, fixed assets, current assets put together 40. So from this, can I say sales is equal to 40 into 2.5? Cross multiplication. So can I say sales is equal to 100? You understand this, all of you? Sales 100 minus variable cost 65% they said. So contribution 35 minus fixed cost. What is the fixed cost they have given? Fixed cost 8 crores. 8. So is this 27? EBIT is equal to 27 minus interest. 20 crore debentures are there at 15%. So 3. So EBT is equal to 24. Tax rate is given in the question. What is tax rate, ma? Tax rate is given in the question, 40%. So 40% on 24, tell me, is it 9.6?
Yes, sir.
So EAT 14.4. Using this data, can you calculate operating leverage? Contribution 35. You need to write formula also in the exam. Okay, operating leverage is equal to contribution by EBIT is equal to. Then you need to write the workings. 35 divided by contribution by EBIT 27. Can someone calculate this and tell me, please? Hello, are you alive?
Sir, 1.29.
1.29. Then this idiot is saying 1.2. Now he rectified. Okay, 1.29. Financial leverage. EBIT 27 by EBT 24. 27 by 24. Is it 1.125?
Yes, sir.
Now combined leverage is equal to contribution by EBT. 35 by 24. How much more?
1.45. 1.46.
46. EPS or return on investment, something they asked. What is that? What is the fourth one they asked? EPS. Yes, EPS, operating leverage, financial leverage, combined leverage. EPS is profit after tax divided by number of shares. Because in this problem, preference shares are not there. No, if preference shares are there, then we would have subtracted preference dividend from the numerator. But preference shares are not there. So PAT is equal to earnings to equity shareholders. So EAT by N. What is EAT? 14.1 crores, 14.4 crores divided by how many number of shares are there in the problem?
1 crore.
1 crore. So take calculator and calculate 14.4 divided by 1. How much? $14.4. Excuse me. Excuse me. So guys, do you understand this problem? Hello. Oh, Vrinda madam.
Yes, sir.
Do you understand this, madam?
Yes, sir.
You are there in SM class also?
Yes, sir.
You are there in accounts class also?
Yes, sir.
You tell me which subject is easy, strategic management, financial management, or advanced accounts?
Financial management.
Oh, very good. Congratulations. Why you felt advanced accounting is difficult? Huh?
No, sir, but comparatively, I think.
I feel all subjects are easy only. Why?
Yes, sir.
Because you are mental, sir. Read question number 12.
Alpha Limited has furnished the following balance sheet as on 31st March 2016. Liabilities, equity share capital, 1 lakh equity shares of rupees 10 each, 10 lakh. General reserve, 2 lakhs. 15% debentures, 28 lakhs. Current liabilities, 8 lakhs. Total 48 lakhs. Fixed assets, 30 lakhs. Current assets, 18 lakhs. Total 48 lakhs. Additional information. Annual fixed cost other than interest, 28 lakhs. Variable cost ratio, 60%. Total assets turnover ratio, 2.5. Tax rate, 30%. You are required to calculate EPS, operating leverage, financial leverage, combined leverage.
Who will solve this problem? Oh, hello.
Solve.
I will solve.
We.
Can you tell me what is sales here? 48 lakhs into 2.5. Katam. Same model, no? So can you do this, guys? Guys, all of you, please let me know. Can you do this? Very good. So problem number 10. Read problem number 10, ma.
Calculate the operating leverage, financial leverage, and combined leverage from the following data under situation 1 and 2 and financial plan A and B. Installed capacity 4,000 units. Actual production and sales 75% of the capacity.
Can you tell me how many number of units are sold? Can you tell me number of units sold? How many number of units are sold? Guys, anyone, can you tell me how many number of units are sold? 4,000 units into 75. Ray. One idiot is saying 1,20,000. Another idiot is saying 3,500. How come under the sun you are getting all these stupid numbers? I don't know. Total installed capacity 4,000 units. In that, production and sales is 75% capacity. 4,000 into 75% must be 3,000. Hello, madam. I got one general knowledge doubt. How come this guy got 1,20,000, madam?
I don't know, sir.
I'll tell you. I have seen all the types of idiots. He might have multiplied this 4,000 units with this 30 rupees. That is the only possibility. Otherwise, how can you get 1,20,000? Hey, Ray, you did that only, huh? Hey, Dumbu. Someone got 1,20,000. He might have multiplied that only. Now tell me, what is sales?
Sir, 3,000 into 30.
How much?
90,000.
Correct. Continue.
Selling price 30 per unit, variable cost 15 per unit.
Wait. Sales 90,000. So variable cost how much?
45,000.
Correct. Contribution how much?
45,000.
Correct. Very good. Continue.
Fixed cost under situation 1, 15,000. Under situation 2, 20,000. Capital structure, financial plan A, B. Equity 10,000, 15,000. Debt rate of interest is at 20%, 10,000, 5,000. Total 20,000, 20,000.
So if you follow financial plan A, what is interest payment? If you follow financial plan A, what is interest amount?
Sir, 2,000.
Correct. If you follow financial plan B, what is interest?
1,000.
Okay. Now what we do is particulars. Here we have two situations. Situation 1, situation 2. This situation 1 has again two options, plan A, plan B. Situation 2 again has two options, plan A, plan B. Okay, now our pro forma remains same. Sales less variable cost. So as it is, we'll write same. Okay, now can you tell me sales, ma?
Sir, 90,000.
In all the situations, in all the plans, sales remain same. Variable cost how much?
45.
In all the situations, all the plans same. Contribution how much?
45,000.
In all the situations, it is same. Problem changes from fixed cost because in the question they said fixed cost under situation 1, how much?
15,000.
15,000. So situation 1, can I write 15,000, 15,000 here?
Yes, sir.
In situation 2,
20,000.
20,000, 20,000. Now tell me EBIT how much here?
So 30,000.
Next.
30,000.
Next.
25,000. 25,000.
Okay. Interest. Plan A. Interest how much? Plan A.
2,000.
Okay. Shall I write plan A interest 2,000 here and here? You understand? In plan A 2,000.
Yes, sir.
If you follow plan B,
1,000.
1,000, 1,000 here. So now calculate EBT. Hello, tell me EBT.
Sir, 28,000. 29,000. 23,000. 24,000.
Wow, super intelligent. Without calculator, you are calculating. Operating leverage bolo here.
Sir, 45 divided by So 1.5.
Here,
So 1.5.
okay, here,
1.8.
here.
1.8.
Very good. Next, what is the next leverage?
Financial leverage.
Is equal to EBIT divided by EBT.
Sir, 1.07.
Okay. Next.
1.03.
Okay. Next.
So 1.08.
Next.
1.04.
Correct. Now, can you calculate combined leverage? Combined leverage here, how much?
Sir, 1.605.
Okay. Next.
1.545.
Next.
1.944.
Next.
1.872.
That's all. So this problem is over. Can you believe this problem is given for 12 marks? Oh, madam.
Yes, sir.
This problem is given for 12 marks.
Wow, sir.
Super chance actually. Okay, guys, all of you understand this question? All of you, please let me know. Do you understand this question? In the chat box, please let me know. Yes, very good. So all of you copied this. Can we go to next problem? In ICI study material, you can see this problem and a similar problem. One more problem is also there. We are covering all the problems of ICI. 99.9% all the problems of ICI will be covered. So shall we go to next question, Ma?
Yes, sir.
Next question is 9. Note this problem as very important. Ninth problem will be the last problem for today. Very important model. So read this question, Ma.
From the following, prepare income statement of company A, B, and C. Briefly comment on each company's performance.
This part they did not give any weightage because this problem is based on, this is a problem on calculations. This is not a problem on analysis. So though they asked in the question, this has no relevance. This problem is based on calculations. Read the question, Ma.
Financial leverage, A 3.3:1, B 4:1, C 2:1, interest 200, 300,000, operating leverage 4:1, 5:1, 3:1, variable cost as a percentage to sales 66.67%, 75%, 50%, income tax rate 45%, 45%, 45%.
Super. So now what we are supposed to do is, we need to calculate, we need to prepare income statement. Okay. So this is a problem on reverse working. They already have given us ratios, but they are asking us to prepare income statement. What is income statement? Income statement, first we'll prepare pro forma. We know income statement is this. Correct? So here company A, company B, company C. Company A, company B, company. Okay, so These numbers we don't know. So do you agree this is our income statement pro forma? First we'll take sales, less variable cost, contribution, less fixed cost, EBIT, interest, EBT. Tax is also there in the question. From EBT less tax, you will get EAT. That's all. In this whole story, we don't know many of the numbers, but we know one number. Can you tell me which is that number? Can you see and tell me which is the number available?
Interest.
Interest 200, 300, 1000. Correct? Huh? So interest 200, 300, 1000. Then what to do next? Next, what is to be done? In the question, they gave financial leverage. First, we'll take for company A. So first we take company A. Working notes. Working notes for company A. Okay. Now tell me what is the financial leverage for company A?
3:1.
Financial leverage is equal to, can you tell me the formula?
Sir, EBIT by EBT.
Is equal to 3/1. Correct?
Yes, sir.
So EBIT divided by EBT is 3/1. We'll use rainbow colors. Huh? EBIT by EBT. Why it is not writing? Hello, rainbow, where are you? EBIT by EBT is equal to 3/1. Correct, ma?
Yes, sir.
Can I say this is EBIT divided by EBIT minus interest is equal to 3/1?
Yes, sir.
Are you sure?
Yes, sir.
EBIT minus interest is EBIT minus interest is EBT only, no?
Yes, sir.
Do we know interest?
Yes, sir. 200.
Yes. So can I say it is EBIT divided by EBIT? What all these colors are? Minus 200 is equal to 3. Correct? Huh? Now by way of cross multiplication, can I say EBIT is equal to 3 EBIT minus 600?
Yes, sir.
By way of cross multiplication. Now 2 EBIT is equal to 600. So can I say EBIT is equal to 300?
Yes,
Guys,
sir.
all of you, please let me know. Do you understand this? Sir, except color of the pen, everything is perfect, sir. All of you understand this? Hello, madam. Now what are we supposed to do? Put 300 here. Correct? Huh?
Yes, sir.
And here how much?
100.
100. Here how much?
Sir,
Gajini
45.
4.0. 45. This
55.
55. Now we used financial leverage. That is step 1. Now step 2, we use operating leverage. Operating leverage is equal to contribution by EBIT. What is operating leverage of company A? Operating leverage of company A is 4.
Yes, sir.
Is it right?
Sir, I'm sure, but I forgot.
You are sure because I wrote it.
Yes, sir.
So you might feel your reverse engineering in mind is this guy will remember only. Correct? Ayyo, ayyo. So it is 4/1 means 4. Now in this, do you know anything? Do you know contribution? Do you know EBIT?
EBIT, sir.
Yes. So contribution is equal to 4 into EBIT, 4 into 300, 1200. Hello.
Yes, sir.
Is it right?
Yes, sir.
So 1200 here. So tell me, what is fixed cost?
Sir, 900.
Correct. Now, third ratio given in the question is variable cost to sales ratio. So variable cost by sales into 100 is equal to 66.67% is what they have given. Can I say this means contribution by sales into 100 is equal to 33.33%?
Yes, sir.
Why? Because all of you look here. All of you look here. This is sales is always equal to 100%. In that variable cost ratio is 66.67%. That is what they are telling. That means this is equal to 33.33% only. No. All of you understand this logic? Everybody, please respond in the chat box. Now calculate, if 33.33% is 1200, what will be 100%? What will be 66.67? Simple, ma. This is 1, 2, 3. 33.33 is one part. 66.67 is two parts. 100 is three parts. So obviously this will be 2400. This will be 3600. Or you can also calculate 1200 contribution divided by sales into 100 is equal to 33.33. Therefore, sales is equal to 1200 divided by 33.33 into 100. That is equal to 3600. Whatever you do, answer is 3600 only. Wow. What a colorful life. So many colors are there. So guys, all of you understand this working? Everybody please respond. All of you, you understand this? Okay. So are we clear with these numbers? Are we clear with these numbers? Company A numbers, are we clear? Vrinda madam, company A numbers, are we clear?
Yes, sir.
Now you tell me, company B and C, who will do?
Sir, we'll do.
That's all. Class is over. So we have done leverage analysis. Next class, we'll start with a new chapter. Okay. So guys, before we log off, any doubts?